Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's a volatile start to the December series. The market trades with marginal losses, with Nifty near the 10,200 mark. Auto sales in November also show a robust trend, with all automakers reporting double-digit growth in monthly sales so far. It's the steepest hike in 11 months for aviation fuel as crude prices continue to hover above the $60 per barrel mark. And India's manufacturing gauge expands for the fourth straight month. Manufacturing PMI for November stands at 52.6.
And watch out for all of these and more. But here's what the picture is looking like at the start of 2 p.m. And it's not looking very good. It's not looking too bad either. We are off the highs of the day, and intraday have corrected about 0.5%. But that's okay. There's nothing too dramatic. Though I must say, when we started the day at about 0.44 or 0.45%, you would have thought that the market will shrug off any kind of blues of yesterday. But that hasn't happened, despite the auto sales numbers looking okay. This is what, it's a bit of a mirror image of what was there in the morning. In the morning, the sea of green, very few reds. Now a lot of red, not enough green, and a bunch of stocks falling around in the technology pack in particular. You know, without getting into any other pockets, I just want to mark what's happening to technology. Look at this. HCL Technologies. There is Tech Mahindra, which is down, and there is Infosys, which is down about 1.5%. So technology by and large is looking weak. TCS, which was up about 1%, has also come off in the session today. So technology is looking very, very wobbly in the session today. I just want to get in the advanced decline ratio and then the contributors up on the screen once. Firstly, the market breadth, which is just looking like converging a little bit. You don't know if this will cross or no, but from levels which are substantially high, I think the market breadth has indeed gone down. And then let's get the contributors list. Obviously the losers much higher than the gainers, but technology up there. Infosys, HDFC is putting in a bit of pressure, Reliance is putting in a bit of pressure, and not too many heavyweights having big gains. So ITC or Larsen & Toubro, they're showing muted gains in the session today. But I just want to take a quick check of what's happening to some of the individual movers as well, aside of course the auto names, which have come out with results and have duly reacted. But some individual names should come up on your screen as well, just to show you what are the movers. So firstly, the auto sales impact being seen on stocks like Ashok Leyland as well as Escorts, and there are divergent moves for both of those, so those are interesting. And then some of the top movers. So one is SAIL. I think it's having a big move in the session today. So Steel Authority of India will come up on your screen, and 3.5%. It's after a while that I'm seeing this. I think the last 4% move was about a month back. It's November 3rd. Since then, this is the best move that SAIL has had in the last few days. QIP is open for Mahindra & Mahindra Financial Services, and that stock is up about 2.5%. So good going for that one. There is strength in some of the textile stroke hosiery companies. So VIP Clothing, Big Jam, Rupa & Company. These companies are doing rather well for themselves in session today. L&T Technology Services has done rather well for itself in the session today as well. Look at that stock. It's up about 7%, and I was looking at what the stock has done over the last 1 month, almost 29%. Similarly, Gillette. It's not just so much about this 1.5% move that we're seeing in today's trade, or 2% now, but it's what Gillette has done over the past 52 odd weeks. The stock has given returns of about 52%. That's pretty strong really for a stock of Gillette's nature. Last but not the least, a few mid caps and small caps that I thought we should highlight. Vimta Labs up 20%, Nectar Life 20%, TRF about 13%. Good volumes really for most of these. But this is the non-FNO space. Navneet, what's happening within the FNO basket?
Well, Neeraj, I want to start off with the India VIX. It's very rare on day one of the new series that you see the India Volatility Index going up by as much as 5 to 6%. Let's just pull up India Volatility Index. It's touched the mark of 14.4 is what when I last checked. That will just come up on your screen. But Nifty, look at that. India VIX is up 6%, 14.3, and do watch out for that mark of 14.5. The volumes now on day one, usually the volumes are tepid. It's also Friday, so probably you'll have have traders not carrying they will not roll over their positions till Monday. But also remember, this is December. In the second half of this month, you will have lesser institutional activity as the holiday season begins for the FIs. What's the range for Nifty then for the December series? The options data is suggesting 10,000 to about 10,500. So in terms of the range, nothing has changed. If you look at the November series, also the range was the same. But once again, 10,500 will be a big test in the December series. And also, if you go by the options data today, that's telling you the cap in the near term is actually the 10,400 mark, because the 10,300 call today has seen significant writing. Almost over 11 lakh shares have been added. And if you look at the premium there, 103, that's telling you the call writers here are safe till the time index trades around those levels of 10,400. But on the downside, watch out for the 50-day moving average, which stands somewhere at about 10,183. We have slipped below the mark of 10,200 on Nifty, so watch out. Only 10 more points to go for the 50-day moving average. Two stocks I want to highlight. Neeraj already spoken about them, but I'll just give you some data point from the futures and options segment. Escorts is the one. You also had a big brokerage upgrading the counter, but despite of that, the stocks come under pressure after the November sales number came about. So stocks down. We've seen good amount of short build-up coming up for Escorts on the future side. And M&M Financial, it's touched its fresh 52-week high. And if you look at the December futures of M&M Financial, the open interest is up almost 19%. And Neeraj, yesterday also we were just chatting, the FI figure in the cash segment has been in focus. And I don't know, we were chatting with a couple of guests as well. The GDP number of US was good. It was above what the street was expecting. I don't know, from here on, this month, you'll have RBI meet, then you have the US Fed meeting. And if they increase the rate, usually it's a trend. If the rates go up in the developed market, probably you'll see the funds once again shifting from emerging markets to the developed market. And FI since yesterday have been selling. Almost 1,500 crore figure was there.
Yeah, it's a large number in trade yesterday as well. Interesting to see what happens today. The only question mark is whether this is already priced in, because the street is now working with an assumption that there will be rate action from the US in the month of December. But let's wait and watch. He does have a point there. Let's see if December can actually thwart what we've been used to in October and November. Right time for profit booking as well, frankly, if you are a hedge fund manager. But anyways, all of that and more a bit later on. For now, let's get in our expert on the show to talk about what his thoughts are on how only the year end could be, how the next year could be, and what specific pockets would they be watching out for. Gaurav Mehta, fund manager at Ambit Asset Management, joins us right now on the show. Gaurav, been a while. Thanks so much for joining us on Bloomberg Quint. This is Neeraj here. Good having you. What's your thesis really about what the market is doing right now?
Well, obviously, markets had run up a little ahead of themselves in anticipation of, the reforms translating into better earnings. And, I don't think that the markets are wrong in assuming that, reforms will lead to a better earnings momentum going forward. And, in terms of earnings print, we do think that the worst may be behind us. So, as the system sort of grapples with GST and things normalize on that front, and secondly, as the government's initiatives around, let's say, the PSU bank recap or the massive infra spends that they're doing on both roads and housing, they translate into a reflation of the economy. And thirdly, as the global economy itself recovers, I think the three factors put together should mean that earnings at least should be encouraging from here on. Obviously, the big debate today is that what proportion of that earnings recovery is already in the price, and there's no denying the fact that headline indices are trading at punchy valuations, and maybe they are factoring in some of that earnings uptick already, and which is why any opportunities like, let's say, the upcoming Gujarat election results will be taken to book profits. But for investors with a 2 to 3 years horizon, I think given that we are sitting at cyclically trough earnings and things should improve from here on, I think from a longer term investor, equities and especially the sort of good and clean stocks, as we call them, is still the best investment avenue.
Okay. Gaurav, so what you're suggesting is earnings may have bottomed out, and actually that's been one of the major concerns. You speak to any analyst on the street, either they say there is no earnings growth or the valuation multiples have been expanding, so they find the valuations of Indian markets on the higher side. But I just want to take a view forward, let's say for 2018 now, from here on, if the markets were to scale higher, what are the themes according to you that will contribute the most?
Okay, so I mean, one thing that you're very clearly seeing is that even as the headline indices are where they are, it's not all pockets that are performing together. In fact, we find quite a bit of polarization between pockets which have near-term earnings visibility. They've been re-rated to significantly higher levels. On the other hand, things which so far had a bit of sort of uncertainty with respect to the next few quarters' earnings, their valuations have become significantly attractive. So, our view is that a lot of these export-focused plays, where you had a bit of uncertainty on how things will pan out, I think should now start coming back to favor, especially as the global growth recovers, which data prints clearly suggest that a global recovery is underway. So some of these sectors might come back into favor, and valuations are supportive. So one space from these sort of export-oriented plays that we like especially is the specialty chemical space. And I know it's a broad basket, but within specialty chemicals, agri-based specialty chemicals is something that especially suffered over the last 3 years because of a weak global agri cycle. But things do suggest that there is a turn out there, and valuations are supportive. So I think specialty chemicals, especially the ones facing global agri cycle, are the ones that should do well in our view from here on.
Okay, so are you liking only that agri-based specialty chemical basket, Gaurav, or within the other pockets too, there could be potential winners? Because you speak to a specialty chemical company after a quarter, and most of them believe that FY19, FY20 would probably see growth similar to what they've shown in FY17 and will show in FY18. That speaks of a fairly healthy CAGR for most of these companies.
Yes, so clearly, that is, in fact, if you look at the last couple of quarters or, last 5-6 quarters numbers, these companies are actually struggling with respect to growth, and they were clearly nowhere close to what their normalized earnings growth levels are. So that pickup, most commentary suggests, will happen over the next quarter or two. And as that pickup happens, and as the market gets visibility that, most of these companies are coming back to their normalized earnings growth numbers, that should, apart from that earnings recovery itself helping stock prices, that re-rating also should help stock prices. But apart from specialty chemicals, we think that there's decent amount of value now emerging in pharmaceuticals stocks as well, because that's again a space that's not done well over the past few years now. And both in terms of obviously the pricing pressure in terms of the base portfolio stays, but the pace of approvals clearly is increasing, and especially in stocks where there is no regulatory overhang and where there is an increased pace of drug approval. I think revenue contribution from these new drugs should suffice for the base price erosion in the existing portfolio. And again, valuations there are close to multi-year lows. So I think there's again a decent amount of valuation comfort along with decent balance sheets, which offers an attractive play in select pharma stocks. Back home, obviously domestic consumption is a theme that's re-rated quite a lot over the last few years. But still there are pockets, especially in the home building sector, where because of the entire housing slowdown, the numbers were just not coming through. But with RERA coming in and with the government's crackdown on black money, our view is that housing now will shift from being so far a speculative investment demand driven market to end user demand driven market, and that should help home building materials in general, and especially those categories where unorganized was a large part. I think GST should help bring about market share gains as well for the organized sector. So again, that space that for the long term investors we think looks attractive.
Gaurav, hold on. As we just take a look at the markets once again, Nifty is trading below the mark of 10,200, but one pocket which is standing out, or rather sustaining its gain, the Nifty Auto Index is one of the sole gainers, I would call it, in today's session. But it's just about trading flattish, given up its gains. If you look at it from day's high, the November auto sales begin to trickle in, and automakers have actually started reporting their sales for the last month. Yatin Mota standing by with report card of how they fared in the month of November. Yatin, so far it seems like a good month for both four-wheelers as well as two-wheelers.
Clearly, Navneet, and if you look at the auto industry in general, last November we had the month of demonetization, and the overall base is quite low. And on that basis, we have seen good auto numbers, and the year-on-year growth numbers will be quite high. In fact, if you look at Maruti Suzuki, we have seen a 14% growth coming in for Maruti Suzuki. Of course, this has been the lowest growth that has been recorded by auto companies which have reported so far, because even in the demonetization month, Maruti's base was higher and we had a significantly stronger order book. So Maruti, good growth coming in there. Of course, the export markets were weak this time for the auto player. Ashok Leyland and the commercial vehicle players have reported strong sales growth, 51% growth seen for Ashok Leyland for the month of November. So good going there. As far as Eicher Motors, commercial vehicle business is concerned, the commercial vehicle sales are up nearly 55% on a year-on-year basis. Escorts, that has been a disappointment. The tractor sales are up 6.5%. Street were working with a double-digit, volume growth for them, and that is the reason why probably the stock is down despite a Credit Suisse report recommending a buy. As far as Bajaj Auto is concerned, this time, despite a slowdown in domestic motorcycle sales, the three-wheeler sales are quite strong, and not only that, we have seen a good bump up coming in as far as the export market business is concerned. So on an overall basis, Bajaj Auto also posted a growth of nearly 21%. So on an overall basis so far, it has been a good month of November. If you look at Hero MotoCorp as well as TVS Motors, they are yet to report numbers, but as far as these two players are concerned, we are expecting a 25 to 35% kind of range of growth for both of them respectively.
All right, Yatin, thanks a lot for bringing in all those details. So definitely it's been a good month on account of low base, because last year same month was the month when the demonetization was announced. Gaurav, the auto stocks in the last 1 year have performed well, be it the auto ants as well, barring few of them. I know Tata Motors is not given so much returns if one looks at it on year-on-year basis. I'm not going to be stock specific here, but do you think there is an investment opportunity in this sector?
Well, clearly, auto penetration in India being what it is, I think it's a structural story for long-term investors. But the kind of numbers that you've seen from these companies over the last couple of years, I don't think are representative of trend growth in this sector will be. So especially on passenger vehicles and two-wheelers, I think numbers have been significantly higher than what long-term trend growth in these sectors should be. And obviously those higher numbers have also resulted in a decent amount of re-rating coming through. So from a near-term valuation point of view, I think investors do need to keep in mind that eventually these are cyclical sectors, even as the structural undercurrents are always supportive. And given that you're sitting at growth rates which are significantly higher than trend growth rates, I think extrapolating what you've seen over the last year or two forever into the eternity will not be the right way to value these stocks. So especially on passenger vehicles and two-wheelers, we think that at least from a near-term point of view, valuations do capture most of the positives and growth momentum that's coming through in the sector, and which is why especially purely from a valuation point of view, we would not be very comfortable putting any fresh money to work in that sector.
What works for you, Gaurav? I heard you mention specialty chemicals as one pocket, but that's at best a mid cap, and maybe the companies that you spoke about, which is aggregated, are all slightly larger in size, but otherwise it's at best a mid cap pocket. What within the markets do you have a strong preference for currently?
Right. So as I said earlier, some of these home building categories are also looking attractive to us. Some of the other sort of export focused.
Gaurav, if I can come in.
Yeah.
Gaurav, sorry, excuse me for coming in, but home building
Yeah.
is
Yeah.
probably a really large basket. I mean, do you like the home improvement pocket? Do you
Yes.
like cement? Do you like pipe companies? I mean, is there a particular preference that you have?
Yeah. So, the pocket that we like the most is the one where the unorganized is still a large share, and with GST coming through already, and with hopefully e-way bill implementation on 1st of April 2018, I think the shift from unorganized to organized will accelerate even further. So from that point of view, some categories where the shares of organized players has a wide margin to improve would be, as you said, pipes, that will be one category, and tiles will be another category. So I think those are the two categories that we are positive on. Laminates and plywood is also something that excites us, but again, our view is that given the low sort of discretionary nature, especially of plywood, and the low sort of aspirational nature of that product, the shift will be slower. But for pipes and for tiles, we think that the shift from unorganized to organized should take place rather quickly.
Right. Gaurav, I'm just going to shift focus from the investment themes, but on a macro trend, we had the September quarter GDP numbers which came about largely in line with what the economists were factoring in this time around. Well, going ahead, the markets so far have not corrected so much. Last few days have been pretty much volatile. What are the factors that you would be keenly watching out for, be it domestic factors or they could be global factors which could derail the Indian markets?
Right. So I think one important factor to watch out for, as we all of us obviously know, is the outcome of the state elections later this month, because political stability has clearly been one factor that has not just helped the reform process in the country, but has also helped change perception of foreign investors towards India. So if there is any development which is negative on that front, obviously that's something that will not go down very well with the markets. The second thing I think that we need to keep in mind, not so much from a market trend point of view, but from a near-term corrections point of view, is the pace at which data improves for the global economy, especially for the US, because signs are that those economies are doing really well, and if this recovery accelerates, then obviously that will also mean that the pace at which monetary policies around the globe are normalized is also faster, and as that happens, it'll lead to maybe near-term pressure in terms of the liquidity situation, but it might also change the profile of the kind of stocks that do well, because what you've seen so far is that in a lower interest rate, lower commodity kind of an environment, even low growth stocks which were giving you margin expansion got re-rated. But as growth comes back globally, and as monetary policy gets normalized, and as yields start moving higher, and hopefully along with it commodity prices will also move higher. As that happens, this segment, for example, the FMCG stocks, etc., where overall growth rates are lower, but there was margin expansion because of commodity benefits, people might move away from those pockets to pockets which are more growth oriented in nature. So that might also impact the complexion of the kind of stocks that do well. But yeah, from a short-term point of view, even from the overall market point of view, a bit of a liquidity shock through faster rate increases might lead to near-term corrections, even though I don't think that will be instrumental in changing the overall trend of the markets.
Well, there's been a sharp sell-off actually since the time we've started the show. Nifty has actually breached its 50-day moving average, about 10,183 in the intraday session. Right now trading around those levels, but clearly it's been a sharp sell-off that one has seen. Bank Nifty has not seen major selling, but I think today's fall is largely on account of your IT stocks which have been under pressure. TCS, Infi, HCL, all of them are your heavyweights. And look at that, the Nifty IT index is at day's low with cuts of 1%. Gaurav, before we let you go, just want to get your view on do you see any threat of major outflows from the foreign investors in the coming months, largely on account of the macro data from US markets has been improving. The latest GDP numbers are to go by. They were above the street estimates, and now could be the chance probably these foreign investors would now want to park their money in a developed market and shift it from the emerging markets.
Right. I mean, that's a trend that we've already been witnessing. So, if you remove the first 3 months of this calendar year, so, let's say start talking about the beginning of this fiscal year from April onwards, foreign flows have anyways stayed tepid, except for the last few weeks or so. So, from that point of view, that trend where normalization of monetary policy leads to realignment of flows is already visible. But as I alluded earlier, if growth comes back, then again, equities would be the class to be in, and as global growth accelerates, people looking for that beta play would be forced to move towards emerging markets, and in that sense, after this initial period of realignment because of increased rates, people will go back to countries that offer growth. So this, I think, is a near-term realignment process. But if the global economy is recovering, and that's what leading to interest rates going up, then I don't think that is going to be negative for Indian markets. In fact, one episode to refer back to in history is the period from 2003 to 2007. That was a period when global interest rates were rising, global economy was doing well, and emerging markets were doing even better than the global economy growth rate, and hence they were beneficiaries of global flows. So I don't see why it should be different this time around. So if that growth does materialize, then sooner or later you should see foreign flow coming back into emerging markets.
Okay, Gaurav, we leave it at that note. Appreciate you joining us today on Bloomberg Quint and giving us your views on the Indian markets. Well, the markets are seeing a major sell-off. Nifty is now down about 50 points, trading below the mark of 50-day moving average. And you've also got the Bank Nifty, which is trading with cuts of about 50 points. Well, let's move on to the stock of the day, and that has to be Mahindra & Mahindra Financial Services. It's been trading in the positive territory since the morning session. Remember, the company also launched its QIP, and obviously you've seen some selling pressure in the last few minutes, and that's the reason why the stock has also come off its day's high. The QIP was launched yesterday, where the company is raising about 1,000 crore rupees. The floor price was also set around the 439.6 mark, and currently the stock's trading above that. It's hit its 52-week high. But moving beyond M&M Financial, let's also put spotlight on Jubilant Life Sciences. The stock has gained for 3 out of the last 5 sessions this week and has gained as much as 8%. Neeraj has some interesting analysis on what the terminal is throwing about, Neeraj.
Yeah, actually, just before Navneet, I highlight the terminal elements as well and point out what the trading pattern is. By the way, keep in mind the index is down, and we'll get to our technical experts in just moments from now. But since we've brought up the subject of Jubilant Life, I just wanted to bring out the 2 or 3 things that have recently happened. One, management has guided to higher earnings in the second half in the con call that went by about 15 days ago. They also spoke about how improved traction in radio pharma and APIs would be the key reasons why the company could do well in the second half. And they thought that the overall FY18 EBITDA margin could be in the range of 20 to 21 odd %. So these are bullish comments coming in from the management of Jubilant Life about 10-15 days back. So a bit of a tailwind really to a stock which saw some correction. Now, look at what brokerages by and large believe the stock could do. And you probably argue that for most pharma companies, you would have more buy calls than sell calls. Jubilant Life, no sell calls, all buy calls. The price target is 851, which is, well, substantially higher than the current market price that we have of Jubilant Life of 690. So it's had a bit of a volume and a price spike in today's session. This shows you as well that look at how the volumes have really gone up in the last few minutes of trade. So doing well. Earnings picture looks okay. Valuation estimates are fine. On the growth rates that the management has given, the valuations don't seem to be too steep. And if indeed they can manage the growth rates without having any kind of compliance issues, remember it's one of the companies that has got a good compliance track record. So if it continues to do all of that, there's no reason why this volume uptake, this price uptake that we're seeing may not really last. So that's something that you got to keep in mind when you're talking about Jubilant Life. But Navneet, frankly, while we can talk about individual stocks, it's all about the Nifty right now.
Sure, Neeraj, and we'll get to that. Let's bring in Rahul Randeria, technical analyst at IFCI Financial Services, who's joining us right here in the studios. Hi, Rahul. Good afternoon, and thanks a lot for coming by. Nifty's breached the 50-day moving average. Would you go ahead and short at these levels?
Good afternoon, Navneet. If you look at the daily chart of the Nifty, in last 2 days we have seen a severe sell-off in the Nifty, and yesterday was the expiry. Today we have seen some, first of all, a gap up opening, then slowly and gradually it has started losing momentum. Now today was a bank holiday, and due to the merge of a settlement, the people, those who have bought the stock yesterday, could not have sold today. So because of that, a lack of this more activity on the stock, we have seen, on the indices as well as the individual stock, the momentum is not picking up. So we could see some sort of downside from here, not major. But looking at the lower degree charts, the stock Nifty is into deep oversold territory. So we could see a technical pullback from the current levels. Currently it is just quoting over its previous top, which was 10,178 Nifty spot levels, and currently it is just quoting around those levels. So maybe in the next week or so we could see another 30-40 points downside, and then we could see a technical pullback. At this point of time, I would not recommend to go short, because already it is on the oversold territory in the lower degree charts. We could see a technical pullback, but yes, definitely 30-40 points down, one can buy a Nifty with a stop loss below maybe 10,100, 10,090, and for a target of 10,300 short to medium term. So definitely at these levels I would not recommend to sell, but yes, on any further correction I would recommend to buy in Nifty as well as Bank Nifty.
What will drive the Nifty higher now, to your mind, from these levels?
Yeah, the heavyweight stocks, couple of days back we have seen, the heavyweight stock were consolidating, whereas much of the action was seen in the broader markets. Mid-cap index was making lifetime high, whereas Bank Nifty and Nifty was consolidating, and in the last 2 days we have seen a sell-off. So definitely in heavyweight stocks are also in the oversold setup. We could see a technical pullback from those levels. Maybe private sector banks, Reliance is also deep oversold territory. Then if you steel stocks. So these are the couple of stocks we could see a technical pullback, which could lead to a bounce back rally in the next week. So definitely at the lower levels, one has to watch out for particular levels and then enter into while going long with a strict stop losses.
All right, we are hitting fresh lows, 10,165. But do you really think clearing holiday has to play a part? Today being a clearing holiday, you're suggesting yesterday's trades are not cleared today.
Yeah, because the settlements are merged.
Sure,
so,
I understand.
yes,
Everything's going to be done tomorrow now, for today and as well as yesterday. But what has that got to do with the markets falling?
Yeah, because the activity, which BTST activity,
okay, so you're
will
saying the
not be
funds
there.
get blocked.
Yeah, so after that, once that gets settled down, and then we could see. And already we have seen, almost maybe 600 points of downtick in the Sensex in the last 2 days. Already into a deep oversold territory. Before that, it was consolidating. So we could see a technical pullback in next week. But definitely at lower levels, I would not recommend to go short.
Okay, what are the trades for today's session then that you're giving out?
To be very frank, for intraday it is just 1 hour left, but yes, definitely for positional trade I have a couple of stocks. For short-term positional, where we have seen, Ashok Leyland, it has corrected from the levels of 134. It made a bottom around 108, 105. Again, the stock is showing some resilience at the lower levels. Short-term, we could see a technical pullback from these levels, and again, it can retest the 52-week highs. So traders can buy at current levels and on corrections to maybe 118 with a stop loss of 116. Short-term positional target would be 134.
Okay. I just want to get in a couple of stocks going. One of them is Reliance Industries. Just bring that stock up for the benefit of our viewers. It's down about 1% odd. And remember, after the fall yesterday, while there were some murmurs of the stock likely to see some buying, I think the Bloomberg terminal today firmly indicated that the trend had changed. As per the proprietary indicator, which is Trender, the trend was in favor of initiating a short position into Reliance Industries in today's session. It's already paid you some dividend, about 1% lower. Let's see if there's more in store. But this week itself, it's corrected about 4% odd. So the start to December is similar to the start of November for Reliance. Remember, in the first few days of the month of November, there was weakness after which it bounced back. The question mark is whether it can do that in this series or no, or this season or no, remains to be seen. Just one thought on Reliance. I think I heard you mention that Reliance could lead a charge upwards if it were to move. But in the current weakness, are there some levels that you expect Reliance to go down to?
Recently we have seen that Reliance has retested its 52-week high, which was just around 957. Prior, a couple of months back, it was the previous high. Again, this time in the second attempt, it has attempted to break, but it could not sustain it, and again the follow-up rally was not seen. Now, whenever there is a breakout or whenever the price is nearing to its lifetime high, there has to be the fight between the bulls and the bears. So the stock will get some strength at the lower levels, and again it will take an attempt in the next couple of days to break its lifetime high. And as I said, in the last couple of days we have seen Reliance was under pressure. So maybe at the lower levels around say 900 or 895 odd levels, we could see the price settling down. We could see some sort of exhaustion in the selling, and then we could see a rally leading forward to the 52-week high. So definitely it would be a slow moving process. But yes, at lower levels with the stop loss of 875, one can buy Reliance.
Neeraj, Pradeep's not here today, but yesterday, what was the chart of the day on Ambuja Cement, and the headline was make or break, and it's the top gainer on Nifty today. And despite of a weak market, Ambuja Cement has been able to hold on to its gains of about 1.3%. Let's bring in Mayuresh Joshi, fund manager at Angel Broking, who's joining us on the show now. Hi Mayuresh, good afternoon, and thanks a lot for joining us today on Bloomberg Quint. Any nervousness that you are seeing in the markets? 2 straight sessions where Nifty is given up almost closer to 170 points now.
No, so I think the fear related to the slippage on the fiscal front is clearly causing jitters onto the market, but the GDP print again on expected lines. So to a large element, I think Q3, Q4 is going to be much better on all parameters. On the corporate earnings front, it's going to be a year where the base year, because of demonetization, the figures are going to look very glorified, as well as the GDP growth for the remainder of the year is expected to remain very, very stable. But again, I think the fiscal concern is something that the markets are probably getting spooked at this point of time. So largely, again, I think my own sense is that the markets, if they do correct, I think you should follow a stock-specific approach rather than follow how the index move will be. Because the index move, in my opinion, I think the markets might just consolidate over the next few weeks and months up till the run-up to the budget. But largely, I think stock-specific action is what one should actually be concentrating on.
Having said that, Mayuresh, today, it's not really the case of banks really dragging the index down much lower. It's a lot of other components and participants, including IT and Reliance Industries, which are participating the first day of a new series. What's the sense here? Let's say Reliance, for example.
Afternoon, Neeraj. So to a large element, I think the stock has outperformed both the index as well as its own peers over the last few months and quarters, and for rightful reasons. If you look at their the core capex is almost over. If you're probably looking at the telecom part of the business, with a lot of pricing started to come in, you're probably looking at much better numbers, both in terms of revenues getting generated and also the RMS and the SMS share. And even on the core part, with a couple of facilities that will get commissioned, both on the refining part and the petchem part of the business, couple that up with the import that is happening of ethane that substitutes the costly naphtha, you're probably going to see better improvement happening in return ratios, specifically the ROE, which had remained depressed. So yes, I think a lot of the sweating of assets will now start taking place, which will incrementally start adding to the numbers both on the petchem and the refining front. And the telecom part of the business should also start performing well over the next few quarters. So the next few years, I think Reliance is something that I'll remain very, very optimistic about. Any fall probably becomes a good accumulating opportunity, and a clear disclaimer, we hold this stock in our funds.
Okay, Nifty's once again at day's low. I think it's breached the 10,050 mark. You know, Neeraj, these levels were seen around November 15, 16. November 17th was the day when Moody's upgraded India, and that's where the bounce back started. But again, we are back to those levels. So clearly, it was just a short-term phenomena which one had to see in terms of the bounce back which came about post Moody's upgraded the sovereign rating, but clearly unchanged by S&P. Fiscal measures is what our experts are highlighting today. Mayuresh is of the view that fiscal deficit target, which has been set at about 3.2% for FY18, is the concern that the government may not be able to meet. But let's bring in Sarvendra Srivastava, independent market expert, joining us on the show now. Hi, Sarvendra. Good afternoon. What would you do with the index at current levels around 10,150, which is below the 50-day moving average? Would you go ahead? Would you have the gumption to short the markets at these levels?
Yeah, very good afternoon. No, if you remember our interaction over the last 4-5 weeks, I think from the second week of November itself, when we had that big outside bar on the weekly setups, I have constantly maintained that what started at 9800, what started at 7900, mind you, from the 1700 lows post demonetization, what started probably ended at the highs at around 10500 that we made in the second week of November. And now clearly I think a larger correction is what is expected, and probably you'll go and test lower levels. Firstly, the psychological 10,000 mark, I think that is one key support area to look at, but I think gradually it will get broken and probably will go towards 97, 9800, if not more. So I would say that I would definitely want to short the market. I have been recommending sell-side strategies earlier as well for the last couple of weeks. The last month itself, we were carrying a long strangle, but now I think today, by the time I put the graphics, the 10-200 put has moved, but you should be buying a 10-200 put, because as it is, if you do a trade on the Nifty from here, you will have 100 to 120 point stop loss. When I put the graphics, it was 125. Right now, I think it would have gone up a little bit, but around 125, 130 odd levels, the 10-200 put can be bought, and it will be at the money put. And now it is in the money put. When I put it, it was at the money. So with that 125 point, you can stand for the whole month and then see as to where the market falls. So I would say buy some at the money or out of the money puts and hold them for the month.
Sarvendra, what about the individual stock trading strategies?
See, as usual, got 3 trades, and I would be selling all the 3 trades. The first one is Colgate-Palmolive. I think clearly longer term momentum sell-offs here happening, and if you go and look at monthly, quarterly charts, I think this stock is now kind of had its distribution over the last few months and now wanting to break down. So I would say I would want to short it. From a trading angle, I would look for a target of around 980 on the downside, keep a stop loss at 1061.60. Anybody wanting to hold that trade for a month, 3 months, can look for lower targets in the region of around 900, 920 levels as well. The second in line is named Voltas. I think clearly this one is from the pack, which is outperforming. This stock is just recently put a all-time new high, and it's very close to 52-week highs right now. So I would want to short sell that as well. Look to cover at a target of around 600, 604 on the downside. Keep a stop loss there at 626.10. And then the last one is from the weakest of the lot, which we have been already maintaining sell trades from that sector, which is metals. I think that entire space has been weak for this month, and all names have started corrections which could kind of last for some time. So I would again, last time we had shorted both Tata Steel and Vedanta once in one week. I would again like to short sell Vedanta for a target of around 281 on the downside, and I would keep a stop loss there at 298.10.
Okay. By the way, I don't know what the scene would be today, but just keep in mind, just looking at the weekly data, stocks like Hathway, Den, Videocon, etc. seem to have had a fairly decent run this week. In today's session, though, are down in the session, so not that great in today's trade for sure. What's doing well though? In today's session, yet again I might add, aside of course the last few days of a rally that we've had in some of these names, but in today's session what continues to do well is TRF, so good move there. Simco is up another 8% today, so I'm guessing there are these big moves that we're seeing in stocks like Simco, and Apex Frozen Foods is up another 5%, hitting new highs and a new circuit as well in the session today.
TRF, Neeraj, was up, I guess, yesterday. It's a Tata Group company, and
yes.
I don't know, I've just heard from a couple of analysts that this is one of the companies which will be, maybe some sort of restructuring could happen, because it's not been making money in the last few years. I think it's a materials handling company which works for companies like Coal India or something. So let's see whether this one comes on the radar of Chandra for any sort of restructuring.
Yeah, well, let's ask Mayuresh if he's looked at TRF or some of the others. Mayuresh, any thoughts on TRF?
No, so as your co-anchor mentioned, I think there are still some inherent weak links in the entire balance sheet dynamics. But in the second rung Tata Group companies, I think Tata Metallics is something that I've liked over a period of time. And my own sense is that with a lot of support that it gets from its parent, along with the kind of pedigree that it has got on its end user products as well, the EBITDA per end user realization should actually start going up. And if that substantially improves even over the next few quarters, I think even if it's trading at reasonable valuations at this point of time, I think there can be substantial accretion both on the top line, creating a multiplier effect on the EBITDA and the bottom line front. So you have to pick and choose, I think, within the second rank stocks, apart from all the Tata Group stocks that we talk about. I think Tata Metallics is something on declines I'll continue to prefer.
Yeah, a stock that has had an amazing move. So I'm going to pick up two stocks actually. One of them is Shankara Building Products, which at 2117 is now notching yet another day of fresh life highs for itself. It's had a dream listing and a dream post listing run. The other one is Adani Transmission, which of course after having a really stellar run the last few days has seen a corrective move down under 5% today. And look at that move. That's the intraday move over 10 time sessions, and the stock has only has had lower lows on almost each of the trading sessions, which just shows you this kind of trend intraday as well as over the last few days that Adani Transmission has had. Any thoughts here, Rahul, on the charts? I don't know if you can look at Adani Transmission or if you have looked at it.
Yeah, if you look at recently, in the last couple of months, the stock has been under pressure. But a couple of days back, we have seen the stock has taken an attempt to again scale higher, but it could not. And again, selling pressure has got activated higher levels. But I think that already the stocks is going into oversold territory, and this sell-off could take some pause around the 160 odd levels. So yes, definitely some more downside is there, but at those levels there are some support areas. So we could see some sort of pause or exhaustion of the sell-off. So 160 would be the area where one should look out for the stock, and then after making, if the stock makes base over there, one should review it and then enter it to go long. But as of now, one should wait for 160 the stock to test those levels.
Okay, so 160 can be the support for Adani Transmission, currently trading around those levels of 174. Well, clearly the weakness which is being seen for the Nifty IT, your biggest loser there today is KPIT Technologies. The stock's corrected almost 5%. If you could also pull up the December futures and check if there is any sort of open interest build-up that one is seeing on the short side for KPIT Tech, currently trading at day's low with cuts of over 5% now at levels of 162. Okay, I think there's some problem with that plate, but we'll move on to Sarvendra. At these levels, KPIT, would you recommend taking any sort of short call?
No, I think within the IT space, I think we like large cap and mid cap names as well. And the move has been, for a KPIT, the move was a solid move. And we are just doing a correction to that. So I would say that this is definitely not in the shorting basket. Pharma IT is not in the shorting basket from here on. And especially Pharma IT is in my buying list. So I would say that around 155, 150, if it falls another 6, 7, 8 points, I think it could actually end up being a good risk reward to start buying again, accumulating slowly. So I would say that 140, 150 is a strong support area for KPIT going forward, and declines towards 150, 155 probably can be bought into with stops kept below 140, and anybody having an horizon of 1 month, 3 months, I think you can definitely see 180, 190 levels again going forward.
Varesh, comment on this IT and chalk and cheese really in today's session, but after a really heady run, some stocks are coming off, but of course the momentum continues for some others, the likes of L&T Technologies, which is up another 7% and nudging highs today. 2 days ago I saw Nucleus Software having a big run too. I don't know what's the status today, but what do you, if at all, like within this mid-cap IT basket?
So again, largely I think one really needs to differentiate, Neeraj, in terms of the offerings that these players have got. And again, one does really differentiate the fact that between large and mid-cap, I think the valuation difference or the gap is not that large. And again, I think there are obvious concerns in terms of discretionary patterns, so on and so forth, which have plagued their balance sheets. Having said that, my own sense within the mid-cap IT is, and I do lean towards Cyient within the mid-cap IT space, and Hexaware. Cyient specifically because the kind of numbers that it has posted in the quarter gone by, even if one goes with the fair assumption of a 14-15% kind of a EBITDA margin range over the next few quarters, which can easily be possible because of the higher offshore revenues that it can generate and higher on-site margins, I think that is going to be beneficial in terms of the EBITDA performance for the company. And though aerospace as a division has probably not done well because of some concerns emanating thereof, and there are some merger issues as well with its existing clients, I think it is getting offsetted with different segments like communications, transportation, and a large element of its underpenetrated balance sheet in terms of services offerings towards the engineering side of the business. I think that is where the growth can actually start coming from, and if it's able to deliver on that front, I think it can be a substantial performance even on the top line. So my own sense is any decline onto stocks like Ascent or even stocks like an Hexaware, I think those remain my picks within the mid-cap IT basket.
Okay, thanks a lot for that. Just before we hit into one more market voice, just bring up Ujjivan Financial Services. Remember, they guided to fairly exceptional growth rates in the next 4 or 5 years, but the market is clearly perturbed with the cost of funds for some of these NBFCs. Each of the last 5 days, Ujjivan Financial Services has been on a downtick. You could argue that maybe not so much on Monday, but look at post that. And from 410, 415, that's the breakup over 5 days. Keep that in mind on your screen. But over the last 4 sessions, from about 400, 410, all the way to 376 currently, Ujjivan has been in a corrective downtrend. And in today's session, I think in particular, Ujjivan Financial Services is looking very, very wobbly. Why this, Mahesh? I mean, Samit Ghosh sounded fairly confident about growth rates. Is it that people believe that it's very difficult for these companies to have ROEs northwards of 15 and the NPA issues might come to haunt them at some point of time?
No, so what has actually happened, Neeraj, over the past 4 quarters, specifically post-demonetization, has been the concern related to how the disbursements and the asset quality will pan out. And you did see in the results in the last fiscal Q3, Q4, where they actually struggled with a lot of other companies as well within this microfinance stroke small sector lending space. But largely, again, I think one must really understand that that entire model hinges upon the fact of how the collections probably take place. The disbursements have been pretty reasonable over the past 1 to 2 quarters. If you look at their collection efficiency ratios, they are well above 99%, which means that the normalization of business activities have started taking place. The third element also becomes where the increased amount of capex in terms of branch consolidation is taking place and modernization as well, which basically means that the spreads that they were basically enjoying in terms of cost of funds going down and the yields probably coming down as well a tad bit, I think those yields should stabilize going forward as well. So the arguments probably stay in favor of these companies with a long-term view. However, I think how the short term pans out in terms of credit growth, in terms of their AUM picking up, and need a substantial improvement for those spreads to get maintained on their balance sheets. So I think the markets are probably waiting for the fact for that substantial AUM growth and the stability in that to happen, along with stability in the asset quality, which will lead to stable NIMs and spreads and probable re-rating thereof. So long-term call, yes, I think the stocks still look pretty attractive, but from a short to medium-term perspective, there might be still some chunkiness and distortions which might plague the balance sheet.
After a cut of 100 points yesterday, Nifty is down almost 90 points today, 10,137 and counting. Let's just pull up the India Volatility Index. I think it has surpassed the level of 14.5, which most of the analysts have been tracking. Remember, if the India VIX continues to hold above the mark of 14.5, probably you can see more selling pressure coming about in the markets. India VIX on day 1 of a new series, you usually don't see such volatile moves coming about. 8% higher after yesterday's again. 14.7 is definitely on the higher side, and I was just looking at the data, we started this year when India VIX was somewhere around those levels of 11.2 or 12 thereabouts. So clearly the volatility has gone up from the start of this year, though the markets have also gone up around 22 to 23%.
But these are interesting levels that Navneet has brought out over the last 40 minutes. One, the India VIX and the uptick that we've seen there. Two, the fact that these are levels now from where we got that uptick because of the Moody's upgrade as well. We're actually slightly below those levels now.
We're below those levels.
Yeah.
I remember when the upgrade came about, the markets were weak, but that time we were trading around the levels of 10,150 or 60, and we closed that day at 10,200. When the upgrade came, that day's closing was 10,280.
Yeah.
So I think we're way, way below that. And you know what, Neeraj, we were talking to so many analysts. They said it was not an investable upgrade. I think they largely factored in whatever factors they had highlighted for upgrading the sovereign rating of the country.
Yeah, but Well, okay, so that's one way to look at it. The other way to look at it is whether, that S&P happened post that, and they didn't go about and do any kind of change as well. And maybe the markets have taken that in the stride. I would presume that the last 2 days, I know yesterday was being blamed largely on expiry, but I don't know if the fisc numbers and the fisc data that's come out has got something to do with this as well. This is unusual. Let's bring up the rest of the world markets. I just want to see what Europe is doing, what Dow futures are doing in the session today before we take any comments from our guests, because it is looking unusually weak for our markets and volatility jumping up. Yeah, okay,
it's
FTSE
global
marginally, but CAC and DAX are definitely down 1%. Let me just try and see if we can pull up the world futures on my Bloomberg terminal. The Dow Jones is likely to start off marginally lower as well, but that's par for the course. It had such a big day in trade yesterday. You would expect the start to be slightly muted. There are no alarm bells in the US, so the mother market is okay, but Europe is certainly under a bit of pressure. Asia closed just about ordinarily, so nothing out there, but yeah, that's a lot of pressure that we have on our markets in the session right now. Rahul, are you changing your call on the index? I mean, I know you mentioned that you'd probably look to buy, but the ferocity of the fall, does that change the levels at which you would buy a little bit?
Yeah, if you look at the daily charts of last 3 to 4 months, whenever there has been a sharp fall, the recovery has been very slow and gradual. I will give you 2 examples. In maybe 2-3 months back, the fall was 8 to 9 days, and again it took 24 days to recover. After making a new high, again it fall 7 to 8 days, and again it took 27-28 days to recover. So this kind of pattern what we have seen, and which could replicate in future also. Next current month seems to be lots of events, Fed meet, RBI, Gujarat elections. So there could be a slow move from the lower levels, and every lower levels maybe 10,000 seems to be a very psychological mark, and in previous bottom was just around 10,094, 10,080. So these were the levels where Nifty has tested and again rebound from those levels, but the rebound was very slow and gradual. So again, I think in near future or in coming future we could see a slow and gradual pace picking up, and again Nifty testing all-time highs. But it will take some time because this current month seems to be very eventful. So it should be a buy and dips market, and one should keep focused towards the stock specific action.
Keep in mind that a bunch of moves that will happen in the markets over the course of the next 15 days, 15 trading sessions, would well be a factor of what happens on December 18th when we do have the verdict, or maybe December 14th when we have the exit polls, because I think that, to my mind, aside of what happens on RBI policy or the Fed meet, I think that is the single biggest determinant of what happens in the near term. Mayuresh, before we let you go, what to your mind is this pressure on? Because I know we spoke about it at the start of the show. You mentioned that the fisc slippage probably kept you a bit worried, but would it be that 2 days in a row for us to see down about 1% apiece without the Nifty bank falling as much today, at least?
Yes, it's a sum of parts, Neeraj, at this point of time. So it's not that the fisc front loading was not known to the markets. Obviously, it was known to the markets. But the larger question is, will this put a constraint on government spending for the remainder of this fiscal? And if it does, I think what kind of an impact does that have in terms of the macroeconomic activity? So that's one point to be flagged out on the domestic front. The second angle also becomes, if a lot of equity issuance does start coming through, does this actually suck away the liquidity or the excess liquidity that the market is enjoying at this point of time? Third, again, I think the budget is around the corner over the next 2.5 months. So whether there are any excessive or excessive calibrated moves in terms of a populist measure that can get announced. Farm loan waivers is an example that we've seen some states incorporate that. And fourth, again, large part of the market would also like to see 3 elements on the growth side. So whether the private capex is picking up, which we do not believe over the next 2 to 3 quarters to say the least, if credit growth is picking up, which will be very, very slow and gradual, and what happens with corporate earnings. So the re-rating of the markets in a substantial manner hinges on these factors. Gujarat elections, as you flagged out, become a very sentimental positive aspect for the markets on December 14th when the exit polls are announced. So a lot of activities are happening around this month. So to a large bit, my sense is that a large element of these events are known to the markets. The unknown element is on the 14th. If that happens, I think the markets will get a boost, at least sentimentally.
Okay, so the markets will continue to take cues from all these important events that are lined up in the month of December. Mayuresh, we'll let you go on that note. Thanks a lot for joining us today and giving us your views on the markets. Let's move ahead and talk about the buzzing stock of the day, and that's Steel Authority of India. Nikki Mirchandani joins us with all the details. Nikki, over to you.
Hi, so the stock that is buzzing today in trade is SAIL. The stock has risen as much as 5.8%, which is its highest single intraday gain that we've seen at least in the past 20 days for that matter. And the stock has cooled down from its high level and is currently trading with gains of around 4%. Volumes remain moderate at currently 1.5 times its average 30-day average volumes on NSE. Also, if you look, the stock has snapped a 4-day losing streak to trade with gains today. The trigger behind this move is Philips Securities report, which is actually now recommending the stock, has upgraded the rating for the stock to buy from sell earlier. It has also upgraded the target price to 120 rupees as compared to 44 rupees that you've seen previously, and this implies a good 56% upside from the current levels. Now, if you look at that, in past 5 years, Philips Securities has rated SAIL sell twice and neutral once. Nearly now, but then if you look at the Bloomberg consensus, it's a different picture there. 79% of the analysts tracked by Bloomberg still suggest a sell rating for the stock. In fact, they suggest that the stock has a potential downside of nearly 25% from these levels here on.
Wow, thanks a lot for that. But this too has come off from the highs of the day. Keep in mind, I think it was trading at somewhere around 80, now coming off a little bit in the session today. But it's 3 p.m. in just moments from now. We'll get you all the Fab 4 stocks as well. On a day like this, might be difficult to find fabulously moving stocks, but well, Yash probably has managed to do that.
You will find face.
Yeah, he's got a
sure
smiling face as well. So yeah, it's good to see a smiling face, Yash, on a day when the markets are down 1% after a terrible Thursday as well. But what are the stocks on your radar?
So it is going to surprise you, but first of all, a good afternoon to all the three of you.
Thank you.
Well, as you rightly said, markets are down and out about a percentage point, but 2 of our Fab 4 lists are in fact locked in an upper circuit. Nevertheless, let's get started. So we have Vimta Labs making it to our Fab 4 list for the very first time, and the stock is locked in a 20% upper circuit after the company came out with their second quarter results earlier in the day. A net profit nearly doubled, while EBITDA rose as much as 77%. Margins too came in significantly higher, seeing an improvement of almost 10 percentage point on a year-on-year basis, and the street giving it a big thumbs up. ILNFS Engineering is another name which has been on the up since coming out with their second quarter results, and is another stock which is locked in an upper circuit of 5% today after the company said that it has won a road construction order worth close to 582 crores. With this order, the company's overall order book stands at about 5,000 crores, with this order being executed within the next 21 months. Also, we have Talwalkar Fitness on our radar. Now, this one is up as much as 6%, gaining the most since August of 2015 after Ventura Securities initiated coverage on the stock with a buy rating and a target price of rupees 728. Now, they believe that Talwalkar, which is a leader, the market leader in their space, to gain from the huge opportunity in the fitness industry. Also, they see that the company's gym business to see its revenues grow by as much as 19% on a compounded annual growth rate until FY20. So do watch out for this one. And lastly, Den Networks, not a great move, was up about 2.5–3%. Like I said, it was a difficult day to find the Fab 4, but nevertheless, it makes it to a list after gaining for a 6th straight day and was up almost 14% in that period. Volumes too came in substantially higher at over 7 times the 20-day average.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. I don't know if Vimta Lab numbers have had a rub-off effect on these lab companies. You've also got stocks like InSwift Lab, Morpin Laboratories. Both of them have seen a good gains in today's session. Vimta obviously has been locked in upper circuit with gains of 20%. Morpin Labs is up almost 13 to 14%, and you've also got InSwift Lab. That's the other company which is listed on the National Stock Exchange. That too has seen good gains coming by, but clearly the selling pressure continues, and I guess index is now almost at day's lower cut of 100 points, more than that, 10,122 there. Ambuja Cement, which was your top gainer, has also come off day's high. That's just sitting with mild bit of gains, but on the losing side, Indiabulls Housing Finance, that's lost the most, down 5%, and Tech Mahindra Mahindra, Sun Pharma, Vedanta are a couple of your nifty losers. And clearly, you know, stocks which were going up from the likes of liquor stock. I remember Radico Khaitan had a huge rally in the recent past. Pull up Radico Khaitan, that too has shed some amount of gains. It's down almost at day's low. Radico Khaitan down about 7%. Indiabulls Housing Finance, Rahul, on the charts, how does it look, and would you recommend taking any sort of position here?
Yeah, today stock has broken, you know, the crucial support. So we could see some further downside, maybe 1100, 1110. So definitely at those areas, you know, there has been a cluster of support zone, and already the stock has consolidated. It has taken an attempt a couple of days back, but it could not see the further follow-on buying. So definitely the stock was under pressure since last couple of months, and again still the chart seems to be a little weak. But overall chart seems to be into oversold territory. So maybe around 1100 we could see some sort of basing out, because already we have seen the sentiment from last 2 days in the markets has been negative across the board. We have seen you know, the selling pressure into each and every stock. So one needs to wait for, you know, this sell-off to get exhausted a little slow. Once price gets stable, and then one should review and take entry into any other stocks. So, but one has to wait for some, you know, exhaustion from selling pressure.
Somebody who's been talking about minding valuations now, I think, for a while, is Deepak Shenoy, founder and CEO at Capital Mind, joins us right now on the show. And Deepak, correct me if I'm assuming too much, but the nature of the tweets that you've put out, some of the last conversations that we've had, at least seem to suggest to me that you were wary a little bit of some pockets of froth. Now, I don't know if this is a result of just a mean course correction because of valuations, or because of the markets fearing the fisc numbers that came out yesterday, or some knowledge that somebody has about what's happening on December 9th and December 14th. But what do you attribute this weakness to?
Hi Neeraj, you know, it's strange. I don't want to say I am still wary. I think we're just 3% off the top, and you know, really the market is frothy in a lot of quarters. Very few stocks that convince me that this is, you know, they're steals and they're going to go up substantially. I think to a very large extent we are walking on eggs, you know, so you will succeed if you're light enough, but at some point there'll be a point of cracking. So I'm happy. I welcome that, because for two reasons. One, I want more stocks to buy, and secondly, I think it's healthy if the market corrects. We've been in this range for a while. I think markets are not supposed to be this non-volatile. So I would welcome any downward volatility if it happens. Having said that, we're still invested, 65% invested. So while I think we should crash, this is nowhere close to one.
You are 35% on cash, Deepak?
Not on cash, but more like debt allocations in more short-term funds. The idea here is, you know, it doesn't make sense to be 80-90% allocated in equity at this time. No time in the past when the markets were valued by this much has it made a lot of sense to be even more than 50%. Even being 60-65% is just me saying maybe I'm wrong. But having said that, I think, you know, we need a decent correction, or we need a massive increase in earnings for me to say that this market deserves a much bigger equity allocation.
So the massive increase in earnings will come in only, if at all, and we'll get to know about it only in the month of Jan. It's still, what, 45 days before we get the first inklings of what the earnings would be. So therefore, my question is, do you believe that we will get some more correction between now and then? You know, the point, Deepak, that may just corroborate that view is also that globally, world over, managers are sitting on a hefty profit number that they have made. Some bookings, some guest was referring to this, that some bookings of that profit will also happen in the month of December.
That could, you get arguments both ways. Many times the numbers are said, we get compensated as a percentage of profits we make, though not necessarily book. So effectively, I could say that, listen, these same managers will push their stock values even higher to end December on a high note, so they can get their maximum commissions or maximum bonuses. So it works both ways. I don't think this is as simple an argument as that. I don't think right now is a significant move. We've just had a 1% 2 days. I think, we've been tamed by the lack of volatility. Markets are supposed to do this all the time. It's not even abnormal. So I believe earnings next quarter, that's not going to affect 145 days, because when I say earnings, markets move in like 365-day period on earnings, not really on a 50-day period. So while I expect news to not really impact it on the upside, I think right now it's a straw that will break the camel's back, but it'll be the last straw. There's so much straw already out there. It'll seem like a small insignificant reason, but it's going to be something that comes out of the blue. So just have to be wary about that. That's all.
Deepak, good afternoon to you. What would you look to buy then at these lower levels?
We're still buying some. There's a couple of stocks that we've been interested in. If you look at the financial space, the gold loan companies like Manappuram and Muthoot have been quite interesting. We're invested in Manappuram. We find it exciting from a long-term perspective. They have taken a lot of losses in their microfinance subsidiary a little bit before when the losses have actually occurred. So they've put a lot of capital into it, and they've had bad results for the last 2 quarters. They take NPAs very fast as well. So as in they cut their NPAs very fast as well, unlike public sector banks who keep them lingering on for a while. So we like that stock even at these valuations, because the stock hasn't moved much. So looking at it from a 10-year perspective, I hope at least that there is huge scope to grow 5x, 10x from here.
Okay. Just Deepak, hang on for a minute, but it's 3:10, that time of the show, and we try and tell our viewers what could happen within the FNO space come Monday morning. It's the start of a new series. Difficult to find reasons to have too many stocks within the ban phase that might enter the ban as well day one. Navneet, I don't want to preempt too much. Is there anything noteworthy happening there?
I think I'll disappoint you today, because it's just the start of the series. So I don't think there's been any sort of major build-up which will breach the 95% mark. But I'll still highlight a couple of stocks which are very where maximum open interest so far is. You've got Fortis Healthcare, that's one counter which has seen significant amount of open interest addition. And if you recall, in the last series, Dewan Housing throughout the series, majority of the trading days was in the ban period. So that's one of the other counters where almost 73 to 75% of open interest as a percentage of market-wide position limit was there as of yesterday. So watch out for these two counters. But overall, Neeraj, if I look at the options data, there's heavy call riding that has been seen for 10,200, 300, 400, and that's not a positive sign at all as of now, because the premium is almost 120 on 10,200 strike. At the start of the show, I said the cap could be about 10,400, but now the premium is suggesting the near-term cap on the markets could come anywhere about 10,300 now. So the base is shifting lower.
Okay. Not a good sign. We are closing in almost at the day's lows. I mean, we'll be there very soon. In about 11 minutes, we'll shut down trade. We're very close to the day's lows in the session today as well. And it's looked fairly wobbly. I'll give our experts a chance, technical experts a chance to look at charts slightly with a bit more depth and then come in with calls. But can't not help to ask Deepak about the PSU banks, because for all the chatter that we've had about the gains, etc., SBI and a few others, and SBI is the mothership, mind you, is a lot lower than what it was the day after the bank recap. Is inherent near-term weakness the last 2-3 sessions? Is it market linked, Deepak, completely, or you would reckon that that banks in general and PSU banks in particular probably need to drift a bit lower before they become valuable again?
Yes, they do, Neeraj. They have a big NCLT case that's coming on board, the RCOM issue. If NCLT says it's going to go into insolvency or they're going to initiate proceedings of any sort, we're going to see public sector banks take another big hit, because you have to write off 50% of the loans, or not write-off actually, or provision 50%. So big losses again on that front. It might just about meet whatever capital raising they'll do from the bailout. So that's one. Secondly, look at the bond yields. They're up above 7%. So the quarter losses on their bond holdings, they hold about 10% more bonds than they're required to hold, government bonds than they're required to hold. I think 30 or 35% of SLR that they hold. That is going to see a mark-to-market loss in this quarter because of the bond yields rising above 7%. So double whammy. The ephemeral impact of a potential bailout has kind of withered away. So possibly that with the fiscal deficit numbers hitting bond yields again has impacted them, I think.
Okay, stay on, Deepak, stay on, gentlemen. We'll get you what Daily News are recommending as well in a bit, but need to go across. I think we are in conversation with the Yes, I think New Delhi, because Bloomberg Quint's contributing editor Praveen Chakravarti is in conversation with Arvind Subramanian, the chief economic advisor.
Hello, I'm delighted to be having this conversation with India's chief economic advisor, Arvind Subramanian. Arvind, thank you for taking the time.
Thanks for having me.
What I thought we'll do is we'll take a step back from some of the high-frequency economic indicators and talk a little bit about what I call the changes and the challenges in the Indian economy over the years. But given that we had the GDP release yesterday, it would be conspicuous if we don't talk about that. So let me begin with yesterday's GDP release. Manufacturing at 7% must have been heartening. Do you believe, or are you reassured that we've somewhat gone past the demonetization blues?
See, I think that first of all, I mean, on the face of it, what is encouraging about this is that there were 5 quarters of deceleration. Right. Remember, especially at a time when the world was accelerating, especially last 2-3 quarters. So that was the kind of the worrying part. So this seems to have arrested that deceleration. But as they say, one swallow does not a summer make. I think we have to be very watchful going forward. We have to see what the manufacturing numbers, are indicating, because actually what the numbers mean is that formal manufacturing is apparently growing at 9%. So we have to see, whether this will persist, whether it reflects, the fact that we've gone past, the twin policy experiments or not. I think we have to be watchful, cautiously kind of be hopeful that these trends will continue going forward, because I think the important thing is that, are we doing enough to address our real challenges, which is the twin balance sheet challenge, the lack of demand, and all of that. And I think also on the external front, there's good news and bad news. Remember that the good news is that the world economy is picking up.
Yeah.
So I think there's been some improvement in export growth, which I think will help going forward.
Yeah.
But oil prices are also going up. So I think on the whole, I think on the face of it, it seems encouraging, but one swallow does not a summer make.
And I call it the trend is right, the levels are perhaps not there yet. Yeah. But, I actually do want to pick up on exports, since you mentioned that, and that's been a puzzle. There is certainly one school of economic thought in India, which is export growth has been so anemic, especially the last 2 quarters of global growth has been very, very robust. And in this context, the argument, or this school of thought argues that small and medium enterprises account for half of India's exports. Perhaps supply chains are broken, and we may have a deeper supply side issue here than we recognize. Do you subscribe to that?
See, I think there's been some confusion over the export numbers. Yeah, I've been looking at them a little bit carefully, and if you look at manufacturing export growth in the last 3 months, it's been at about 9% in value, dollar value terms. When you do the smoothing and everything. Manufacturing exports, okay. It's a bit down from the early part of the year, but 9% growth is still substantially greater than what we were doing for much of 15 and 16. Now, so in that sense, I think it's picked up. I think the question, what is not clear to me, and we're looking at the numbers, is have our exports grown commensurate with the pickup, as you said, in world trade volumes and the pickup in growth in many of the other countries as well? It's not clear to me. We're looking at the analysis, but it's not that exports haven't picked up from the trough of the 15 and 16. 15 and 16 exports were really, I think, export growth was very weak, and now they have picked up. Part of it, of course, is world demand, but your question about have supply chains broken, I think the jury is going to be out, because unless we get a good sense of how the rest of the world is doing. Also, we're doing some analysis for the survey to see, in fact, whether exports have been affected by the twin experiments that we had or not. Both demonetization and GST. So we're going to look into that a bit more carefully. And so until we finish that, I still would like to reserve judgment on that.
What about imports? I mean, imports been very strong.
See, I think the supply chain broken story is for both exports and imports. Right? Yeah, exactly. So it was true that import growth was very rapid, but in the latest few months,
non-gold.
Yeah, exactly. I'm talking only non-oil, non-gold. Exactly. So the argument was that there's been a negative supply shock, which has affected both manufacturing exports and domestic production competing with manufacturing imports as well. Again, we're looking at these things exactly as we speak, and reserve judgment. But on the import numbers too, the latest numbers show a marked deceleration relative to earlier. So let's see what is due to what.
Okay. And I know you've been on record saying our potential is 8 to 8.5. We should not be satisfied with anything less. But you've also cautioned about real incomes in the agriculture sector. And agriculture GVA was again anemic as yesterday's numbers. And I know I heard you yesterday about terms of trade there, but what is your prognosis for real incomes in agriculture?
See, I think that in the economic survey that we put out in July, we saw very clearly that for the cereals, real incomes had been relatively constant, because I think for the MSP, I think support this, puts a floor on prices. But for the other crops, all the other crops like cereals, pulses, the oil seeds, and the vegetables, some of them, or many of the vegetables, we saw that prices had declined quite substantially. Now, to me, the puzzle there was that normally when you have a positive supply shock, prices do come down, but they don't come down so much as to reduce incomes. Okay, so that's what had happened when we looked at the data in July. Now, since then, there's been another twist, that for the non-perishables, oil seeds and pulses, prices had been low, remained low. But for the perishables like onions and tomatoes, the prices have spiked enormously, and unseasonally as well. Yeah, normally in the winter they actually come down. So my sense is that agricultural incomes are under stress. Yeah. And that is why the government, about a couple of weeks ago, we imposed some tariffs on oil seeds and pulses to shore up farm prices and therefore farm incomes. So this year, so the question is that why has it been that this year, normally positive supply shocks are associated with positive income shocks, but this year that's been different. Why that is the case, I think needs much more investigation.
Okay, and but
And of course, you can watch this entire conversation at 9 p.m. tonight right here on Bloomberg Quint. And some interesting comments out there, of course. And we'll, of course, analyze this in greater detail a bit later on. But last 10 minutes left to trade. Time now, first, before we get in our trading ideas, which is what we usually do. But we haven't gotten Yatin's channel checks with his dealing room sources. So let's first do that on our segment Dealers Say. Yatin, what are you gathering from your sources?
Neeraj, today there is some bit of panic as far as dealing rooms are concerned. We are close to that 200-day moving average on the Nifty, and clearly around that level there is some panic coming in. In fact, if you look at the India VIX also, we saw some good spike. In fact, I was just checking it on the Bloomberg terminal, and it said that almost a 12 to 13% jump in the last 3 trading sessions. So post the expiry, a good sell-off is what we can see in the markets. HDFC probably has been one stock which has been clearly battered down in trade, almost 70-80 rupees down in the last 3-4 sessions, and clearly FIs have been aggressive sellers as far as this stock is concerned. Also watch out for Escorts, and this is one stock wherein dealers are recommending a sell. A STBT kind of a strategy based on FNO trends is what dealers are recommending as far as Escorts is concerned. And finally, in the mid-cap space, there is one stock, GHCL, wherein dealers are indicating that there could be a short-term 10 to 15% upside
in a market like this. Yatin, thanks a lot for that. So do watch out for some of these individual names. Closing strategies, though, from our experts. Sarvendra, to you first, and it could well be a Nifty strategy, but one top trading strategy from your end. It could be an STBT or a BTST.
I would go with the STBT. Nifty, we've already discussed that we believe that the medium-term move is over and we are set for a larger correction. So there again, the view is short only. But I'll pick a stock. I'll say Gas Authority of India with a short-term topping out pattern, and with today's bar, which is a kind of a daily bullish engulfing, bearish engulfing, not the bullish engulfing, but a daily bearish engulfing bar. And my sense is that the stock could probably test lower levels, and over tomorrow and day after it could go all the way till 440, 445. So look to short sell that with the stop loss kept at 460 and above. I would sell GAIL.
Okay, sell GAIL is Sarvendra's top closing strategy. What about you, Rahul? Your top one closing strategy?
I do not have one top, but I would go with the saying that whenever people are selling, one should go buy. I have 4 short-term trading calls. First is the buy in Delta Corp. One can buy at current levels and on corrections with a 2-3% stop loss. Upside positional target would be 257. My second buy call would be Jindal Steel. The pattern is good. Stock is on the verge of a congestion breakout. One can buy at current levels. 2 to 3% stop loss should be placed at the lower levels. Short-term positional target would be 190. Third call is NMDC, where one can buy at current levels. Short-term positional target 142, 2 to 3% stop loss downside. And fourth and final call would be Dish TV. One can buy at current levels and on corrections to maybe 78, 2-3% downside stop loss, and upside target would be 91.
Okay. Well, just some more stocks. There are hardly any gainers, by the way, keep in mind. And 4 after the 5 gainers, 5 out of the 6 gainers are less than 0.5% in the green. So it's a screen which is dominated by red. As would be the case, just the fact that we are not down 2 or 3%, we are just down about 1%. But it's a screen which is very strongly dominated by what's happening on the losing side. And amongst the broader end of the spectrum, some very active names have come off. So Radico Khaitan is now down 8%. McLeod Russell is back to 219. KPIT Tech, we've spoken about this, and that one is down about 5%. Sobha Developers, the principal real estate stock gainer the last few days, is down about 5% as well. So some active movers are coming off in the session today. This smacks of not just retail activity, Deepak, but even HNI activity, booking profits now, because there are a clutch of these names which wouldn't fall on these volumes. It was just merely retail selling out.
Yes, I mean, we're seeing this across the board, but sometimes it's not the fundamentals. It probably wasn't the fundamentals that took it up in the first place. So bit of markets here and there. We've seen how markets can punish stocks substantially. So this is one of those days where I think yesterday the market was down 1.5%. Most mid-cap portfolios are up 1%. Today it's the opposite. The market's down 1%. Mid-cap portfolios are down 2%. So you're going to win some, you're going to lose some. I think on average, if you take the last 2 or 3 days, it's kind of still been okay. It's not panic yet. I think we have not seen panic for a while, and I think it'll set in only if this thing continues for a few more days.
Well, the first half of the session, you did see the broader markets outperforming. In fact, the advance decline too was in favor of the advances, but clearly that picture has changed. Even the broader markets succumbed to the selling pressure in the last 1 hour of trade, and currently advance decline is clearly in favor of the declines. But just 3 minutes to go for markets to close. Let's head across to Neeraj and find out how exactly the closing is panning out. And Neeraj, it looks like it's almost at day's low for Nifty.
It is. No panic buttons as yet. Keep that in mind. I mean, we could well recover starting sometime Monday or Tuesday as well. It's very difficult to call this market. Every drawdown, 2 to 3% has been bought into. This could be no different. But yes, we are ending at the day's lows. The banks haven't fallen as much. Keep that in mind. Today it's technology-led, to an extent oil and gas-led. Banks haven't really corrected dramatically in the session today. This is a departure from what was happening in trade yesterday. The broader end of the spectrum too, just doing exceptionally well. I don't think that would have survived. Yes, no. So small caps down about 1%, mid cap index down about 1% as well. So it's across the board. Keep in mind, not saying it's panic selling as yet, and not saying it's really doomsday. But yeah, we've had 2 bad days now. Very interesting to see what's the kind of selling that's happened from institutional investors. Not too many gainers on the Sensex. These are the Sensex movers. And those 3 or 4 names out there, ITC and L&T, lending that bit of helping hand to the index today. But then you come to the bottom end of the screen and a clutch of names down and out, about 1%, 1.5%, 2% apiece for each of these heavyweights in the session today. And frankly, if you look at the Nifty 50, then the clutch of losers are much, much higher. But it's a sea of red on the Nifty 50 as well as the Sensex 30 as well. More stocks losing than gaining. I would guess the same for the broader markets, Navneet.
We mentioned in the second half, you also saw the broader markets which succumbed to the selling pressure, but the stocks which were moving up in the last few sessions are seeing profit booking from the likes of Radico Khaitan. Look at that stock. If you look at the intraday chart, it's almost closed at day's low with cuts of as much as 9% around those levels of 260. The IT pack Neeraj was mentioning was very weak today. The Nifty IT index was one of the top sectoral loser, and KPIT, one of the constituents of that index, lost almost 5%, and the closing also came at day's low. Indo Count is the other counter which was very weak in today's trading session. That also closed at day's low with cuts of 4.5%, closing around those levels of 114. A couple of your F&O stocks, Equitas Holdings, that too was very weak. And look at the losses which have come about. It came just in the last hour of trade, and day's closing may not be a very positive sign for the next trading session. So do watch out for all these counters. But I'll also highlight a couple of stocks which went up. Vimta Labs, that was locked in upper circuit after the company reported good set of numbers. VIP Clothing was also locked in upper circuit. That counter saw gains of almost 20%, and that was also locked in upper circuit. Tata Group company TRF has been in focus in the last 2 to 3 trading session, and today also it closed with gains of as much as 10%, and profit booking continued for stocks like McLeod Russells, which was running up in the last few sessions. So that closed at day's low with cuts of 7%. Moltec Technologies is one counter which has been active in the last 2 to 3 trading session I've been observing, and look at that today also in a weak market it closed with gains of 17%. And lastly, Kirloskar Brothers, this stock gained momentum in the second half of the trading session, as you can see, almost closing around its day's high levels of 283.
My list will not look as impressive, Navneet, as we wrap up trade. Some winners that Navneet rightly brought out. But if you look at the list of contributors, you will obviously see that the losers are outperforming and overpowering the winners by a huge margin. So heavyweights, and look at that right side of the screen. Reliance, Infosys, SBI, HDFC, all heavyweights, all contributing to the fall today, and not enough gainers. That is the problem for the session. The heat map will show you that it's a sea of red, and I'm very interested in bringing up the market breadth worms as well, because you would see, this is a mirror image, by the way, of how it started off. There were just about 6 stocks in the red when we started off trade, and just about 6 stocks in the green right now, and that too by a very, very small margin that they are trading in the green. A lot of red on the screen as we saw. IT and certain NBFCs like Indiabulls Housing Finance clearly right up there in terms of the losers. And let's get the market breadth up on the screen, and you will see they're starting to converge at about 2. My guess is that they would have converged at about 2:30, quarter to 3, and the gap very, very wide between the gainers and the losers. So not a good day. And last chart that I want to bring up is how the week shaped up for the Nifty 50, and you will see barely 4 or 5 names in the green. The Nifty itself corrected about 2.5%, so it's not been a great week, this one, but just about 5 stocks in the green. So it's a pattern that we followed for the week. In the Nifty 50, just 5 stocks ending in the green and a clutch of stocks with the red. Some heavyweights out there in the commodity pack, in the banking space, State Bank of India, and IT too looking slightly wobbly, with Infosys falling about 4.5% in this week gone by. Final thoughts from our experts before we get in our technical view. Deepak Shenoy, lastly, you know, I asked this question to you at 3, but a lot of people tune in right now to get a sense of what do our experts believe would be the future course of action. You would reckon that there is a fair chance, we can't predict with certainty, but there's a fair chance that there is some more correction next week, particularly because it's an event-heavy week as well.
Yeah, I think, you know, the events typically, according to me, provide some stability to the market because you get people that play both sides. It's the benign times that scare me. So I think there's going to be volatility. I can't predict a crash of any sort right now. It's useless to predict. It's better to react. So I expect markets to be volatile. If there are external events that impact the market, I think that will be interesting to see. I don't foresee a huge crash of any sort, but one never foresees those things. They just happen. So I think one has to be better prepared. I've been advocating keeping equity valuations look in mind. We should reduce equity allocations. That's as good as doing anything for risk allocation right now.
To watch out for the market internals today. Let's see if the FIs were selling in today's session as well. Remember, yesterday's sell figure was 1500, and most importantly, also watch out whether there was any sort of support which came from the domestic institution. If that's the case, if that's not the case, in fact, the markets would have seen more cuts coming about. But let's get some closing thoughts going from our technical experts. Sarvendra, India Volatility Index closed above the mark of 15, and I guess it did touch the mark of 15 is what I can see on my screen, higher 11%. In this high volatility scenario, would you take any sort of bet on the index on the upside in the next week?
See how times change. 12-15 was a normal kind of volatility, and now we are saying that it is the upper band of volatility. But I believe by no means is the upper band at 15. 10-15 has been the lower band, if at all. 8 to 15 has been the lower band of volatility. So we are just at the higher end of a lower band. My sense is that it can actually go up and could be much higher than where it is right now. So I'm not the right person probably to comment on volatility, but one thing I can say is that as far as my analysis goes, the move that started at 78.93, which was in the month of December 2016, I think that move probably culminated at 10.490 last month, which means the month gone by. And yesterday we had a monthly negative bar as far as the Nifty is concerned, and today we have a very, very bearish kind of a weekly outside kind of a formation, which is a replica of what we formed in the second week of November as well. So now with these back-to-back monthly and weekly negative indications, my sense is that minimum we will correct towards 9700 is what I would say could be more itself, but 9700, 9800 would get tested. It might take a month, 45 days, but I think 97 will get tested, and I don't see that the market going up next week. If the low at 10,094, if I'm not the last weekly bar, yeah, 10,094, if that low breaks, I think that next 100, 200 points on the downside will be pretty fast. So I would say that sell on bounces as long as we don't go up 10,490. I think the move is ended. So bounces towards 10,200, 10,300 can be sold into. 10,490, 10,506.60 can be the stop loss on a closing basis, and 9,700 could be a target going forward for a month, 45 days.
Rahul, would you concur 9,500?
No, actually not. I have a counter call. If we see last 15 to 20 trading session, the cycle of uptrend and downtrend was very short period of time. Nifty had tested 10,094, again it went back to 10,409, again it came back to those particular levels. So I feel that 10,000 being a psychological support and 10,094 was a swing low, previous swing low. So I feel that in next week that could be tested and that could act as a crucial support, and from there we could see an upside rally. In short to medium term, to be very frank, a couple of days back we were bullish and we were expecting market to break all-time highs, but it didn't happen. It took a 2-time stop loss. But yes, definitely the larger degree trend seems to be positive until unless Nifty sustains about 10,000, which is the psychological mark. The uptick would be a slow and gradual move, but definitely at those levels where there is we have seen 2 days of panic selling. So whenever there is a panic, one should start buying, but it should be in a slow and staggered manner. So one has to watch out for 10,000 mark, but I think that 10,094, 10,080 would be the area where we could see the intensity getting narrowed down, and then we could see a technical pullback. But definitely next week I would be a buyer at the lower levels.
Okay, Jamin, both of you, thank you so much for joining in, and Deepak, thanks for putting all of that into perspective as well. Always good having you. Look forward to have you more often on this forum. Take a short break on that note. We come back with some more analysis and some very interesting voices that spoke to us during the course of the day.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
Welcome back. You're still watching Countdown, and clearly it was not a great week for the market, especially the last two trading sessions, including today, saw cut off almost 200 points on Nifty. Bank Nifty is also back to levels of 25,200, and most importantly, the closing today came in around the day's low level, which may not be a very encouraging sign as we head across to the next week. But in terms of the contributors, that's the list there on your screen. Couple of stocks which managed to hold in the positive territory with the likes of Kotak Mahindra Bank, Bharti Infratel, M&M, Maruti Suzuki. So the auto pack was up largely because of November sales number were in, they registered a double-digit growth. But what dragged the index lower? Reliance Industries for the second straight day, Infosys, SBI. But if you look at how they dragged the index lower, it's just between 9, 8, 7 points, which is telling you the sell-off today was more of broad-based sell-off which came across. The majority of the Nifty constituents today ended the day in the red, and clearly India Volatility Index on day one of the new series surged as much as 10%. Intraday it also touched the mark of 15. Again, not a very encouraging sign. So let's see whether we can recoup those losses in the fresh week or not. Switching focus from Indian markets to European market, looks like it's been a weak day of trade for the European markets as well. Let's go across to Yuan Potts in London for all the action so far. Hi, Yuan.
Good morning from London. A negative start to the final month of 2017. Now, after opening fairly flat, European equities soon took a dive, with the benchmark Stoxx 600 falling to a 2-week low. The dollar also trading lower this morning, and Treasuries gaining after tax reform efforts stumbled in Washington, D.C. The euro is firmer this morning as manufacturing data underscored the region's economic resilience. Now, manufacturing in the 19 countries that share the euro currency is now expanding at the fastest pace since the year 2000. The PMI reading is at its second highest ever since the survey began 20 years ago. But that positive news not feeding its way through to the equity markets. Every major European market trading lower today. Germany's DAX and the CAC in France both down some 0.8%. Those are two of the worst performers this morning. Now, looking at the GRR function on the Bloomberg, we can see that all 19 industry groups currently trading lower, with car makers off some 1.5% down the most. Tech stocks also trading the market. They're down by 1.2% this morning. Meanwhile, on the oil markets, crude is trading higher today after posting its longest streak of monthly gains since early 2016. That's in the wake of the news from Vienna that the OPEC-led coalition has agreed to extend its supply cuts through to the end of next year. WTI crude oil trading just under $58 a barrel. Back to you.
So I have to.
All right, thanks a lot for that. Really appreciate you taking the time out, and have a good day in trade. But moving forces and a segue into Bitcoin. Despite the sharp surge there, the biggies in business are still shying away from it. Actually, some of them are calling it a bubble, but the Goldman Sachs CEO, Lloyd Blankfein, is still skeptical on this currency, but he's not saying that, or he didn't come close to saying that it's a bubble. In a conversation with Bloomberg's Alex Steele and Mike Bloomberg as well, he says it is too soon for the bank to have a Bitcoin plan. Listen in.
I'd say life must be really, really rosy if this is what we're talking about. It just feels.
This is what Wall Street's talking. Okay, so I was talking to Jeff Curry over at Goldman the other day, and he said the only thing that people are asking him are Bitcoin and EVs. So you're a huge investment bank.
Life must be really rosy if this is. Yes, I'm thinking about it because I get asked about it. I said, look, where I am is it's not for me. But there's a lot of things that weren't for me in the past that worked out very well. If you told me that if it was 20 years forward and it worked out, I could tell you why it worked out. But based on everything I know, I'm not guessing that it will work out. But I can say, I'm not going to stand there and be strident and say it's a fraud. It can't, because it might.
Alex, I think also people confuse Bitcoin with BitChain. There is a blockchain. There is a technology where you can have different accesses to data. Different people can control it. You can see who's doing what and that sort of thing. And there are places where that is a useful thing. In fact, the Bloomberg system is a blockchain. We just, instead of having the users control it, we control it. But it has all the attributes of that. Bitcoin is something very different. Bitcoin, and there's a whole bunch of cryptocurrencies that have been started every day. You have a new one. That's something very different. And whether or not the governments of the world will lose control of monetary policy, I'm skeptical. They're just not going to let that happen, and they shouldn't.
Something that moves up and down 20% in a day doesn't feel like a current, doesn't feel like a store
and it's
value.
just being quoted up and down.
Okay, from Bitcoin to Indian markets, which have run ahead of fundamentals, but URBUD believes they will sustain these levels. The reason is liquidity. Well, in the conversation with Bloomberg Quint earlier today, he, however, raises caution against the real estate sector. Listen in to a slice of that conversation.
Till now we did not have the macro supporting, did not have the earnings supporting, but still the market is going up. At least now one of them has fallen in place. Now I think the earnings pickup should happen probably by at least the March quarter, and that is when I think all this sort of celebration is justified. But if that doesn't happen, I think we still run the risk, especially because international events can take the FII interest in the Indian market away. So therefore, I think that is something we need to closely watch. But at least the fundamentals are probably in the right direction as far as the market that has been celebrating a turnaround in the fundamentals for quite some time now.
What leads the move higher, Mr. Bhatt? I mean, banks are now looking like a tired lot, to be honest. And PSUs, after that one big day, haven't really been able to make any kind of headway. Private banks, we all know, are, in a manner of speaking, valued fairly well. NBFC is a different kettle of fish, but not really too many NBFCs which are that market moving, say for that matter HDFC per se. So what really takes center stage if the markets were to head higher?
Well, I think, it's nobody's argument the markets will head higher dramatically from here. It is just that it is possible to sustain these levels.
Okay.
Because actually, as far as valuations are concerned, valuation of the argument has lost focus quite some time back. It is basically liquidity. And if the liquidity continues, even with probably some selling by FIIs possibly, I think the market can probably sustain these levels, given that some good news is coming around the corner.
Okay. Are you a buyer of real estate stocks? And the reason I ask this is evident. I mean, I don't need to spell out the reason. The price movement is there for everybody to see.
Well, I think the good news on the real estate front has really not yet been seen, because quite like RERA and the demonetization has really affected this sentiment here very, very dramatically, and there is still quite a lot of unsold stock out there. So therefore, I think the first signs of revival in the sector are not exactly seen. It's exactly like what is happening in the market, that expectation that things will turn around, and that is what is probably keeping these stocks at these levels. But I think the turnaround is something that we've not yet seen, and maybe it will happen after some time. But right now, I think it's too early for us to take a bet on this.
The shift in people's saving habit from physical assets to financial assets is an important macro phenomenon that is playing out, says Milind Barve of HDFC Mutual Fund. In a conversation with us earlier, he also spoke about HDFC and Standard Life's plan to dilute their stake in HDFC AMC through an IPO. Listen in.
Yeah, so what the board has resolved and announced yesterday is basically two things. One is a decision to list the asset management company. That's the first thing. As you're aware, effectively you can achieve the listing by diluting 25%, but over 3 years. So the pace of dilution has not yet been decided. Effectively, the decision has been made to list the company, which involves a 25% dilution over 3 years.
Okay, no clues, sir, yet on when you start the process, how much you dilute in the first tranche. Would it be at least up to 10% in the first tranche, sir?
Yeah, you're right. The minimum is of course 10%. Work on the IPO process actually begins. It sort of begins today. Once we have the board green signal. So I think it will be in the course of the next couple of months that the board will really finalize how much. 10 is the minimum, so how much we need to, how much we should be diluting in the first tranche. I think that number has not yet been decided, but it will be, of course, something above the 10% minimum.
Okay, so
as things stand, I mean, I can add that it probably will be more than one tranche. Yeah.
Okay, just a broader question, Mr. Barve. What is the thinking behind this? Why go public? Why list the company?
So as you know, I think if you look at any of the HDFC Group companies, they're all being listed, largely most of them are getting listed. So we've been in this business for about 17 years, so that the business has reached a degree of maturity. And as the basic philosophy of the HDFC Group has been over time to list businesses as they grow to a certain size. So I think the philosophy is 2 or 3 things. One, it's just to bring the greater degree of transparency and accountability in the business. I think it's a healthy thing for any asset manager to be listed because it makes them more transparent, more subject to disclosures. So I think it's a matter of time. I would expect hopefully more asset management companies will list. I don't think we want to be just opportunistic in trying to do some capital raising in the market when the IPO market has been fairly very strong in the last couple of months. I don't think that's the driver to a decision to list the company. To list the company is a much more profound long-term decision. So the timing has very little to do with it in my mind.
Okay. So I'm just taking the liberty of asking a slightly broader question, and this is about the mutual fund flows that we have seen in the last 1 year. 2017 will definitely be a milestone year, the kind of SIP money that's come into the markets. What have you made, A, of the quantum of flows that have come in, and secondly, the durability of it? Do you think there is, this is seeped in enough that you're going to sustain, these level of inflows are going to sustain in the next couple of years too?
Yeah, so clearly, if you look at the industry flows in the last 3 years, before this current year, the industry got 80,000 crores into equity in 14-15, 85,000 in the following year, that is 15-16, and in the last financial year, we got something like 93,000 crores in equity-oriented funds in terms of net new flows. And if you just look at the first 6 months of this financial year, in the first 6 months, the industry collected 107,000 crores, which is more than what the industry collected the whole of last year. So clearly there's a very strong momentum, as we've been discussing this in the past for some time. There is one important macro phenomenon which is playing out, which is very important, which is a shift from people's saving habits from physical assets to financial assets. But the more important thing, which is more important and relevant to our business, is within financial assets, where has these household savings been directed to? And I think what is happening very clearly is that there is a little bit of a shift away from bank deposits. Bank deposits, mind you, are still growing at a healthy rate of 10-11%. But the incremental savings into financial pool is coming into more capital market products like both insurance and mutual.
Okay, and that's of course Milind Barve. But here's Barack Obama speaking. Let's get across.
State dinner, and we danced some Bhangra. We have had Diwali celebrations in the White House every year that I was there. And all of this is because, as I said in a speech that I gave this morning, India and the United States have so much in common. The U.S. is home, of course, to millions of Indian Americans, and their proud heritage is at the same time combined with an incredible contribution that they make in every field in the United States. Both of our countries are hugely diverse. And we've got different languages and different backgrounds and different ethnicities and different faiths. But what we also have in common is a set of values that we believe in deeply. And I believe that the partnership between the world's oldest democracy and the world's largest democracy could be a defining partnership of the 21st century. Now, I also believe that charting the course for that better future is going to depend on all of you. It's going to depend on young people. There are all sorts of things that I care about, all sorts of specific issues that I'm going to continue to work on, and I plan to lend my voice to focus the rest of my career on. I'll be out there advocating on behalf of doing something about climate change and doing something about inequality and making sure that women are getting the same opportunities as men and fighting against, there you go, and fighting against the forces of discrimination and tribalism and racism. But the single most important thing that I want to focus on is lifting up and identifying and working with and training the next generation of leadership, not just in the United States, but all around the world. And that's really the central goal of our foundation. It's going to be based in Chicago, my hometown, but we want to have projects, programs, partnerships, and digital networks everywhere. And I'm not just lending my name to the foundation, I'm going to be an active part of it. This year I've already met with young people like yourselves in Germany, in Indonesia, in Brazil, and then we had our first ever Obama Foundation Summit in Chicago. And I don't want to speak too long because I want to spend most of our time on questions, and Anshul is going to help to moderate it. But I did want to mention the reason I thought it was so important to do something in India. You've got the largest population of young people in the world. And that's a lot, so we might as well start big. We've already identified some remarkable young leaders who are doing extraordinary things here in India. Authors, athletes, artists, entrepreneurs, civic leaders from all across the country. We've got activists who are working on everything from education to gender equality to climate change. A couple of young leaders were recently with us in Chicago, and I just want to acknowledge them. Trisha Shetty started, where is she? There she is. Did you have fun in Chicago? You are the most inspiring. Oh, see there, now, I didn't call on her to say that, but thank you. But Trisha started an organization called She Says, aimed at educating and empowering men and women to take action against sexual abuse. Also joining us in Chicago was Sanchana Krishnan, who works with communities to destigmatize mental health issues through the power of personal storytelling. Where's is?
All right, let's move on. Cyclone Oki intensified into a severe cyclonic storm and moved to the Arabian Sea today after causing heavy rain that has left at least 9 people dead in Tamil Nadu and Kerala. The Navy rescued 8 fishermen caught in choppy waters. Cyclone Oki is heading towards Lakshadweep and is likely to strengthen further, triggering a red warning, the highest category alert. Well, the worst seems to be over in the mainland, but warnings of heavy rain has been issued for South Kerala and South Tamil Nadu. Schools near the coast in the 2 states have been closed.
Well, one only hopes it's not as worse as others have come out to be. But on that note, from Navneet and me and the team that put this show together, thank you so much for watching and have a great weekend.